Everyone talks about fixed RSI settings, but they fail the moment the market spikes. Why? Because the static lines can't handle the speed of scalping. If you want to trade like a pro, you need dynamic levels to evolve with the price. In this video, I'm going to teach you how to build these dynamic bands and integrate them into a complete 2-time-frame system. Stay until the end. I've got a quiz prepared to make sure you're actually ready to trade this strategy. Before we start, let's check the quiz from the last video. I asked, would you trade or pass here? Many people chose trade, but the right answer is actually pass. Why? Because look closely at the price action. Yes, we had the indicator signal and the high percentage, but notice that the price was floating in the middle of nowhere. There was no support, no trend line, and the candlestick was weak. Remember, the indicator is your assistant, not your boss. Never force a trade without price action context. With that lesson learned, let's jump into today's topic. Establishing the trend domain. Today we're mastering a 5-minute scalping system, but before we touch the 5-minute chart, we must establish our trend domain. Think of this as your map. If you trade against the trend, you're gambling, not trading. So we start on the 15-minute chart. Our goal, find if the market is bullish, bearish, or sideways. We use one simple tool, the 50-period EMA. It acts as our filter and divides the market into 3 zones. 1. Bullish trend. Prices above the EMA 50. We only look for buy setups. Bearish trend. Prices below the EMA 50. We only look for sell setups. Sideways. Price is weaving through the EMA 50. The trend is unclear, so we'll stay out. This is our insurance policy against bad trades, but knowing the trend isn't enough. You still need to avoid deep pullbacks. So, how do we find the perfect entry? Let's zoom in and activate our strategy. The mechanics of the RSI Bollinger Band. With the trend confirmed on the 15-minute chart, let's switch to the 5-minute time frame. It's time to turn our static RSI into a dynamic trading engine. We create these dynamic levels by applying the Bollinger Bands directly onto the RSI. Here are the steps. First, add the standard RSI to your chart. Now, for the Bollinger Bands, this is a critical step. Don't apply them to your price candles. We need them within the RSI pane. Click the 3 dots next to the RSI label to open the More menu, select Add Indicator Strategy on RSI, then search for and add Bollinger Bands. Now you'll see the bands wrapped perfectly around your RSI line. To make sure, open the Bollinger Band settings, go to the Input tab and verify that the source is set to RSI. This ensures the band calculates based on the RSI itself rather than the price action. Think of it this way. Instead of relying on fixed levels like 70 or 30, we use dynamic boundaries that adapt to market volatility. When the RSI breaks below the lower band, downward momentum is mathematically overextended. Conversely, when it breaks above the upper band, upward momentum is mathematically overextended. A professional warning. Never enter a long position the moment the RSI exits the lower band. In a strong trend, the RSI can ride the outer band for an extended period. You must wait for the actual mean reversion. Similarly, never enter a short position the moment the RSI exits the upper band. The RSI can ride the upper band during a powerful uptrend. You must wait for the snapback. So, what is the exact trigger for these reversals, and how do we turn this visual into a precise entry? The precision entry setup. Now let's define our precise entry triggers. We'll start with a buy setup. Remember, we only take these trades if our 15-minute trend filter is bullish. On your 5-minute chart, wait patiently for a price pullback. This will force our RSI line to dip below the lower Bollinger Band. Now, don't rush into the trade. You need to wait for the RSI line to close back inside the band. The moment that happens, that candle is your signal candle. That candle is our statistical confirmation that the selling pressure is exhausted and buyers are stepping back in. You enter your long position at the very close of that signal candle. For a short setup, we simply mirror the logic. When the 15-minute trend is bearish, we wait for the RSI to spike above the upper Bollinger Band. Again, we wait for the RSI to close back inside the band. Once you identify that signal candle, you enter your short position at its close. This strategy transforms a chaotic chart into a mechanical, rule-based system. You no longer guess, you simply wait for the rules to align. But knowing the rule is one thing, seeing them play out in real market condition is another. Let's look at a real chart example so you can see exactly how this looks in the heat of the moment. Real market examples. Buy setup. First, look at the 15-minute chart. The price is clearly above the 50 EMA, so our trend domain is bullish. We only look for lines. Now switch to your 5-minute chart. The price pulls back and our RSI dips below the lower Bollinger Band. We wait, and when the RSI line closes back inside the band, we have our signal candle. We set our stop loss just below the recent swing low, and for the take profit, we aim for a 1 to 1.5 risk to reward ratio. It's clean, mechanical, and objective. Sell setup. Now let's flip it. Here on the 15-minute chart, price is trading below the 50 EMA. We are in a bearish domain. So what do we look for? Exactly, only short positions. On the 5-minute time frame, we see a short-term rally that pushes our RSI above the upper Bollinger Band. We don't chase it. We wait for the RSI to close back inside that upper band. That closing candle is our entry trigger. For the stop loss, we place it just above the recent swing high, and for take profit, we aim for a 1 to 1.5 risk to reward ratio. Notice a pattern? In both cases, we are not guessing. We are waiting for the market to exhaust its momentum, and then we are simply catching the turn. Alright, enough talking. Let's see if you have actually mastered this system. I'm going to show you a real market setup, and I want you to tell me, is this a valid trade? Look at the screen carefully. Step 1. Check the 15-minute chart. The price is trading well above the 50 EMA. We are in a bullish domain. 2. Now look at the 5-minute chart. The price has just taken a sharp dive and our RSI has broken below the lower Bollinger Band. It's currently sitting outside the band. Here is our question. Do you enter a long position right now? A. Yes, the 15-minute trend is bullish and the RSI is oversold. This is a perfect setup. B. No, we must wait for the RSI to close back inside the lower Bollinger Band to form our signal candle. C. No, we should wait for the price to cross the 50 EMA on the 5-minute chart first. Pause the video, look at the candles, and write your answer A, B, or C in the comments. I will reveal the correct answer in the first 30 seconds of my next video. Let's see who really understands the logic. Alright everyone, that's it for today's lesson. If you found value in this systematic approach to technical analysis, do me a favor, save this video to your trading playlist. That way you can quickly refer back to these exact rules during your next live trading session. Thanks for watching and I see you in the next video.